Good morning and welcome back to the Opportunistic Trader for Friday, October 19th. I'm happy to be back. I missed everybody. I actually had to do something in Chicago for 2 days, so I actually did a TV segment, and I went to the floor of the exchange, which was actually, I thought was going to be really exciting, but it was kind of depressing. There was really nothing there. It's amazing what the electronic world has done to the floor. There really is no trading floor. There were like 3 people laying in the pit, just laying down. So I don't know what was going on, but it was nice to see some old friends. And I went out to see Phil Flynn as well. We spoke on TV, and I think it went really well, and again, I'm happy to be back. We were 5-0 when I was away. I actually traded very, very well. Had access to everything while I was there, obviously, with the advent of being able to trade from anywhere, from any device. So it worked well for us. So hopefully everybody did well. It was great trading over the last 2 days for sure. The ranges were excellent. You know, there were easy 10-handle, nothing's ever easy, but easier 10-handle scalps. Today, the market is up 10 handles to start the day, the S&P. The volatility index is in under 20. I think they think everything is okay. The straddles are actually crushed today. They are pricing in less than $20. So it'll be interesting to see if we move today. If we fail today, I will tell you that we will go down and take out those lows either today or sometime early next week. Today is a very critical day for the U.S. equity markets. Going to China. China had a big rally last night. It bucked the trend of most of Asia. It was up 2.5% overnight. The DAX is flat coming in this morning, not seeing a lot out of Europe. I was reading stuff about Italy. You know, they're very concerned there. Draghi, as well as I think the ex-deputy chairman of the ECB made some comments that they were concerned overnight about the Italian budget and a number of different issues. So, you know, we'll keep an eye on that. As far as movers, stuff kind of looks currency-wise kind of quiet. There's not a lot going on there. The U.S. equity market, looking at some stocks, Apple's up 3. The regular FANG culprits are up anywhere from 50 to 1.25%. Not seeing a lot there. We'll have to keep an eye today on bank stocks. The bond market is down again. We do expect the yields to continue higher. The only problem with that, I think, looking at that trade, is it looks to me like a little bit crowded. Not as crowded as it was when we hit 3% that first time and then rallied back to 275, but a little bit crowded. We do think yields will go higher, but again, it's crowded, so I don't know if the acceleration will be there. Crude oil is having an up day for the first day in a pretty long time. It sold off from $77 down to $68 and some change, which is over 10%. Our equity markets are only down 5% from the peak, so oil is acting heavier. I think a lot had to do with the expiration of options, which happened 2 days ago. There was a bias to the sell side. People got caught long, and they pressed it down for the expiration. Looking to buy crude oil if it breaks again. Probably should have been long it this morning, but wasn't that focused on it. The equity markets have really taken our focus, and I truly believe that there'll be great trading in here for some time to come. This is a good opening. If you're negative on the market, you'd rather see an up opening than a down opening. We're not getting out of the woods that easy. Yesterday, we were down 65 handles at one point. We closed down about 50. That's damaging. There is damage in the market, but again, there'll probably be two-way trading today. Good opportunities to buy and sell, but we do believe that unless you see some news or outward strength in some individual names, that the market could sell off and go negative today for sure. We'll keep our eye on that, keep our eye on volatility. What was interesting yesterday was volatility got up to about 21 and some small change, and as the market was making lows again in the afternoon, it never got anywhere near the highs of the day. So vol is at 1933. It looks like it's a bit heavy. They don't want to own it. Maybe the rally will hold, but again, one of our keys, which we always stress, is looking at the VIX, because that's the cue that we look at to trade equity markets, and it's pretty much been cued in. It's really been a good signal. It's worked for a while now. A lot of our other signals are iffy. You know, sometimes they work, sometimes they don't. Sometimes the market follows crude, sometimes it doesn't. Sometimes it follows bonds, sometimes it doesn't. But for whatever reason, the VIX moving or not moving is a good clue. So an example of that would be if the market was up 8 handles and VIX was kind of flatter up or hovering, then you would know, or you would pretty much have a good idea basis the options that the market should come in because the volatility is sustaining. Today it's really hard to cue off of. It's down 4% pre-opening, 3.6, but you know, the market's up 10 handles, so it kind of equates. So I'm not getting that much of a cue, but we will watch it from 1934, and if it doesn't come in much more into the 18 handle, most likely this rally will not hold. But again, we're basically going to watch that to make our determination. We are flat the markets. Our first trade, if we trade a bit higher, will be to short the market. We will look to buy weakness if the market gets hammered. But right now it kind of looks quiet. And again, the straddles aren't that big, so it's, you know, not giving away too much of what's going to happen today. Overall, you know, the bond market's been interesting.
You know, if I could just chime in with a few things here. You know, just looking at the data from across the world here, things are definitely slowing down a bit. You know, Kai was on with us last week talking about the global PMIs and how they're coming down. But just overnight, if you take a look, China Q3 GDP registered its slowest growth since 2009, came in at 6.5%. The retail sales was actually slightly better than expected, but their industrial production was its slowest growth since 2016. And then in Japan, they had CPI come in slightly below expectation. They were coming in at 1.2%. And then the data we just got out of Canada, CPI was a huge miss actually in Canada. Came in at 0.4% negative when they were expecting plus 0.1%. Year over year is 2.2 when they were expecting 2.7. And then retail sales was actually minus 0.1 versus plus 0.3. So, you know, these are all misses here in Canada, China, Japan, Europe. We definitely have some issues going on, especially with Italy. I think a part of yesterday's sell-off was coming from Europe and Italy. You know, continued mixed information from over there, but at the same time, just nothing positive in terms of growth. They have a lot of government issues.
But that's been the mantra since the beginning here. Basically, we have nothing to do with what's going on in any of these other countries. Actually, Greenspan made comments last night that this is the tightest, this is the best job market that he's ever seen in his life. And he's about 90 something years old. So that in itself is a pretty bold statement. I definitely agree with you. Things are different anywhere else in the world, but our situation is very, very bullish on the economic front. You know, there's massive job creation, there's massive growth. There's been, you know, a huge influx of money to individuals because of corporate and personal income tax.
Well,
cuts.
on that note, what you're talking about, it's actually interesting. I didn't post this yesterday, but Brent Donnelly, who I get a lot of information from, he's really a good FX strategist at HSBC, put out a chart yesterday that showed the S&P performance since 1960, and he actually pointed out that S&P performance typically since from 1960 to now, so over a number of years, obviously, when unemployment is below 4.5%, equities actually tend to underperform. Now, there could be a number of reasons for that. One, it could be that there's Fed tightening in that period. There's a number of different reasons. But, we've now been in that period for a few quarters. And so we'll keep an eye on things. But the only other point I was making with this other global growth, and I agree with you 100%, it's nothing new. We've seen this already. Equity markets in the U.S. heavily outperforming European, Asian markets. But you definitely see, whether it be what President Trump has been doing with other countries, kind of the trade games that he's been playing, it's definitely taken a toll on the rest of the world. Emerging markets down 15-16% year to date, like those sort of broad indices, whereas the U.S. markets are up a few percent. That's a huge, huge divergence.
Yeah, for sure. I mean, but that's why you can't really pay much attention to any of these other markets, because we're, as Vince would say, an island amongst ourselves. But I definitely agree there's slowing. And I actually think there could be slowing inherently in here in some different areas, such as the housing market. I don't know if you can pull up a chart of the housing index, the I think it's the XXB or whatever.
We've taken a look at that one.
And the REIT index, and there's a blow up internally in the housing market. It's just not being shown by the world, but prices are down. I was in Chicago. They seem to think it's weak. So it's interesting. It's interesting that that's leading. Is that the chart?
That's the chart there. But it's also, what they're talking about as well is, we're down here in Florida, and housing prices are doing phenomenally down here. But everywhere else in the country, they aren't doing well, and a lot of it comes down to the tax adjustments that were made, by the administration. That's one key area, and then a lot of people are flocking to more tax beneficial regions of the country and away from the Northeast specifically. Has had a lot of issues with the way that they're taxed. It's huge differentiation between South Florida or Florida, Texas, and the Northeast.
Yeah, I mean, I don't know. I think we're holding up maybe, but I wouldn't think the high end is doing well anywhere across the country right now. So
yeah, and we also brought up that lumber chart versus that XHB. But
look at that,
we traded 47, and now we're trading 34. So that's over. That's basically year to date. We started the year about 45, traded up in the first month, up beyond 47. Yeah,
that index is down over 30% basically. So I don't know how that's good. I think that the market kind of knows beforehand, by showing this, that things are much weaker than being shown. But again, markets are iffy here. We're hanging on by a thread. The market's up not very much for the year, so it'll be interesting to see at these levels what the market does. Again, I'm very negative. I've been negative. It's hard in a way. We're short-term trading, so that's different than me being just negative in general. I'm negative on the market. I do think the market is going to get hit before the midterms, and after the midterms, it will not rebound like everybody thinks. But again, today we're just looking at the tape, and we're gonna trade basis what we see, and right now I don't see much. This is a good opening. It's up 9 1/4. Nasdaq up 40.
When you say good opening, what do you mean? Do you mean that for bears, for bulls?
Yeah,
because
good opening.
Sometimes following a big down day, a bit of a quiet open, up 9 after being down 50 or 60.
Well, that up 9 isn't a little. It's you got to look at it as traders. It's not a little. Um, so we just have to keep an eye on it. It's a good up opening to short.
Well, that's what I was going to say. So, are you looking at possibly shorting, like if we go up 5 more points, or
yeah,
what?
100%. I don't want to short anything right quite yet because I've seen, like the other day, it was probably about a week ago, I shorted Apple on the opening, and I shorted it literally 2 minutes before the opening. I think it was trading at 222, and I shorted it. It was like 9:29 and 40 seconds, and then they jammed the stock up to like 224. We ended up making money on the trade. I think we made a couple of bucks. But if I would have waited 30 seconds, it would have been the difference. So a lot of this is marking and manipulation for the opening. So I'd rather wait to see the stocks open. If it holds in here, I would think up 9 is a good area to short, but I'm not going to do it yet because there's only 30, 40 minutes to the opening, and I'd rather sit on my hands, see where the stocks open, and make a sale even if it's up 5, basis the stocks. So to answer the question, I think the market is a sale here for trade, where they sell it up 8, 10, 12. I just don't want to be dislocated on the opening basis cash price. It may cost me because now the future's coming in a little. It's only up 750. But, I've seen that happen to me a bit. So I want to wait a bit. But yeah, so when I talk about this opening, absolutely this opening is a short. I don't see stocks up that much. I don't see news that would put us here. Although there are some external things that I'm looking at that make it, an up opening is, oil being up after being crushed. Stuff is bouncing that got hit. But again, this market in itself will it does its own thing. So I'd like to wait for the opening, short it. Again, I'm flexible. I may not short, but if we get up 14, that area, I like the short side. So we will try to short it, but be flexible. And that's what I see on equities. Bonds.
It's amazing how quiet the bonds are right now. And also gold. You take a look at gold's up like 90 cents. Like you said, currency's not doing a whole lot. That's also been the mantra for really this week. There were times, I think it was Tuesday, that big rally, it was all equities. And Wednesday as well, it wasn't like a big fixed income move. It wasn't a big commodity move. The only, crude did have a very big move this week. It was very active. But, fixed income currencies have not been active in this recent volatility in the equity market. It's really been equity centric.
Yeah, for sure. I mean, equities is where all the action is. 50 handles at a pop, so you got to keep an eye on that. I'm just surprised after yesterday's action how calm it got. The market was trading a little bit lower overnight. Then after China rallied, and then it actually sold off again. I happened to be up at like 4:30 in the morning, and it was basically +1 on the night, the S&P. So now we're up 675, which is,
So it looks like the straddle's about $20 right now for the end of the day, the 2780 straddle. Any options that you look at on the put side, call side that might be?
I would entertain doing ratio spreads. Maybe do the 85, 95 1x2. You can buy 1, sell 2 for a small credit, and you're protected up to 05. Maybe against that, you sell some put spreads. You could also entertain selling the straddle. You sell the straddle at $20, and then you buy wings that are $30 out of the money for $1 on the call side and a couple of bucks on the put side, and you're pretty much protected on that trade. But right now, I'm really more focused on the S&P futures. I'd rather get $10 out of that quickly than sit in a spread that basically will take all day and basically impede a lot of your trading. So this is a great scalpers market, and I would look to be in it. It's forgiving in a sense until it's not, obviously, but it's been forgiving. The trading has been good, and overall, I think our last 5 trades have all been winners, so I'm happy about that. I think I had 3 yesterday and 2 the day before, so we're on a good track. We want to finish the week strong. We hopefully will be very active today. But again, the way I would play it is to short the opening, but wait for the stocks to open and see. We will definitely be both sides of unchanged today. I would think that this market will see the other side of unchanged. I've been wrong before, but I will be flexible. I don't see a lot in the stocks. I don't see any stocks really going crazy. I mean, Apple.
Yeah, like you said, I'm just looking. Everything's up like 0.5% to 1% in the FANG world. Earnings, nothing too. It wasn't a big earnings day yesterday. American Express came out. But next week we have a fair amount of names coming out. Tom McEntee did a good job of breaking down some different names this week. Netflix was a really interesting one. Netflix, when earnings came out, we were about this 350 level, and here we are now 350. But we traded up to 405. So that was a big overnight move, drifted down. Then we've obviously come down with the rest of the market as well. So this is a pretty key area for Netflix if it can't hold after a very good earnings report. But next week we'll definitely have a lot more earnings information.
It's just hard for these companies like a Netflix. They had like 7 million new users or something. I don't know where they get them. I think 5 was overseas. I don't know how long they can continue that trend. And when that trend breaks, the stock's going to get smashed, and it's just, it's tough for these companies on a quarter-over-quarter basis to keep performing and, getting good numbers. The interesting number, I think, for this quarter will be Apple. I think the China sales have slowed significantly. I know Goldman made a call on that. If they don't blow out numbers, which I don't think they will, this stock could trade down 15% at least. I mean, it could go back into the,
below 1 trillion.
Oh yeah, that's what.
What will they do?
What
no
is,
more 1 trillion?
What is
it was like
1
208 or
209? Yeah, so yeah, easily. I mean, that's only 5% from here. So, I think it could do it easily, but I don't know. Their numbers are late in the cycle. Do you happen to know?
I think it's the first. Vince and I were talking about it. I think it's going to be November 1st.
Yeah, so Thursday. It's a ways away. It's not even. I think we're going to get through Facebook, which will be interesting in itself. Facebook has held that 150 area, so it's been holding nicely. But the stock is down pretty good on the year, and the longs are in there. Basically holding their breath because, we basically know Facebook on the advertising side, and it's a very different company than it was. So, it's interesting to see if they're going to be able to pull off earnings when nobody's spending on their advertising or not spending as much. So, and I know their active users can't be up. I mean, everyone I know is off that. Anyone that's under the age of 35 is not on Facebook really. So I guess it's for old guys like me who I'm a new subscriber in the quarter.
Right, I was about to say Larry's a new subscriber. They're going to multiply you times 5. They'll say Larry times 5.
Exactly. I finally got on Facebook and it's over. And that's really it. I'm glad to be back. The markets were great over the last couple of days. I'm hoping for a great trading day today. I'm expecting a lot of action. So, it should be a good day overall. We're going to try to stay out of trouble, try to end the week on a winning note. And, we've been doing pretty good so far. So we're going to try to keep it up. The trade that's interesting, what's the yield on the 10-year now? What is it, 320, 319?
It is right now 318. We came down a little yesterday. We traded up to like 322 or 321, and then when the market sold off, yields dropped a little bit. And so 10 years 318, the 30 year is 337, the 2 year is 288. Still hovering just below, within striking distance of the year's high. 2% there, which given the recent equity turmoil, typically you would have seen yields move lower into that. So I think still trading pretty firm.
Yeah, the market's holding in. Again, I think the positions are overloaded in one direction. But we'll keep our eye on that. That's going to be a good one once it breaks 3.25. I think it'll be almost the same trade that we saw at 3. It took months and months and months and months to break 3. I mean, it was the most frustrating trade. It was over the summer, like when we first went live on the air, and I was like, if bond's really not a trade until it gets over 3. And then it took so long. It took like a month. And then when it went over 3, it went to 3.25 like in 3 days. So, we might get one of those skip to my lose up to 3.5, but just not yet. They're not ready to do it yet. I think once the Fed, I don't know when the meeting is in December, but it may be early in the month. But once we get that meeting out and they raise, I think all bets are off. They're going to, tick up yields, and Fed funds will be 2.5, and there's a lot of alternatives to U.S. equities here that we didn't have a couple of years ago. I mean, you could literally say, Uncle, I'm out, and get 3.5 plus on bonds for sure and munis for sure. That's a lot better than 1 or 2%. So, and that's something that's interesting as well. People that are long bonds and been long bonds for the last couple of years and been okay are now opening their statements and they're down 10 to 15%. They're not really down because until you sell bonds, you're not really down. It's a mark, but still, you have to live with the mark and you have to live with the fact you can't get out of your position. So, we're seeing a lot of that taking effect. And, as we've been pointing out, the housing market and the lumber market and all of these things, which is really the key drivers to the economy. And, I got off the plane yesterday in Miami, and the cranes are abundant. So there's tons of growth. It reminds me of '08, but, again, there's probably more cranes in '08, but I guess the market is more stable at this point. But it's the same mantra. The banks are lending to these builders, and we'll see. We'll see what happens in general. And those are my thoughts for this morning. I don't know, Mike, if you have anything to add before we close.
No, I think that we're going to be, tied to looking at some headlines. I agree with what you said. We'll be on both sides of the positive and negative line in the S&P at multiple times throughout the day. Even yesterday, you saw there were a lot of 10 to 15 point moves, which you were able to trade through well. And I think that it's going to be the same. I'm seeing some Italian headlines coming across, and now we're taking a look at that. More Brexit headlines, obviously presidential headlines, Saudi Arabia news, what's going to be happening with that over the weekend. Look, right now the S&P is up about 0.5%, or actually with the up 10 points, probably up about a full percent for the week. So we'll keep an eye on how people want to go out over the weekend. But, it'll be interesting, even late in the day, to see what the MOC imbalance is. That's been pretty interesting the past few days, driving the afternoon trading. So we'll keep you guys posted on that. But we're going to be speaking today with Tony Greer at 10 o'clock. Tony's really good, taking us through the themes of the market, what sectors he's been trading, and what he's looking for, what's been driving the market. So he'll be doing that with us today at 10. Then at 10:30, we're going to be speaking with Alan Hill, who is based in London and really has his ear on the Brexit pulse and FX. So we'll be talking with him about those things. And then Mark Fisher at 12 o'clock we'll be talking to. And, Mark joins us once a week, and he's actually been on top of things pretty well the past few weeks. If you listen to his things, about 2 or 3 weeks ago, he was talking about buying the straddle and nat gas when it was at $3, and that exploded. And then last Friday, he was talking about being bearish crude oil based on the fact that Saudis might be, basically they know they're in a tough spot here and might just move oil prices lower, put more supply out there to kind of appease Trump and kind of take a little pressure from that side. And, for whatever reason, oil definitely had a down week. And so, he was on top of that one. So we'll be speaking to him at 12 o'clock, get his updated thoughts on everything. He's pretty good when volatility picks up. He has some interesting thoughts, and he gets right to the point. He's not a long interview guy, but he gets you his thoughts and he gets right to the point. That'll be 12 o'clock. But let's keep our eyes on the news, and we'll keep you guys updated on everything that's going on.
Okay, perfect. I'll be in the chat room all day today and back on the air multiple times. Again, I'm happy to be back. Chicago's a great city, but I like South Florida, so I'm home, and we're ready to trade today and make some money.